as I mentioned, 6 billion plus invested last year. I see a lot of DeFi projects on Ethereum, which is trying to attract capital, not only the 2.06 trillion that it has, but attract the remaining 600 billion that you have out there to come back in the system.
Hello and welcome to Alpha and Hash. We've got an exciting speaker today, Nitin. Nitin is the founder of LedgerLink, a very interesting middleware startup, a middleware between crypto and TradFi banking. And Nitin, with his illustrious career earlier with State Street and prior to that IBM, brings tons of experience with him. And we're going to dive into several interesting and exciting aspects in today's talk. Welcome, Nitin.
Thank you so much, Sri, for the invitation and looking forward to the exciting conversation. And I would like to actually congratulate you on your recent achievements, both in terms of launching Arna. I remember sitting right next to you 2 years back, and you had this idea, and 2 years later, you actually have launched this token 2049. So from one conference to another conference, with the distance of 2 years in between, commendable in that for you to be able to stick to your ideas and see that to fruition. So congrats on that, but also congrats on Milk Mantra. It's all exciting, all fantastic.
All right.
Glad to
Thanks,
be here.
Nitin. Thanks. Thank you. So yes, I think just to give a context, I did exit from my first startup, which is a purpose-driven consumer food business, tech-enabled supply chain, ethical sourcing, a premium brand in the eastern part of India. So it was a more than a decade-long, exciting and fulfilling journey, not just about creating a brand and a business and a startup, but also impacting an entire community and ecosystem. So thanks for that, Nitin. And of course, I remember that day vividly. Back in Austin, I think 2022. I think we were in the main auditorium and listening to just one of the talks was going to get started. It was consensus, of course, and I think Nitin you were sat next to me or just about, and we started chatting, and we realized here's this guy who heads the digital assets at State Street, and Nitin realizes that I've got something brewing in my head about AI and tokenization back then, long before AI agents became fancy in crypto. But yeah, it was a very fortunate meeting, and we've become great friends since then. And of course, we'll be doing a lot more going ahead. So Nitin, fantastic to have you on board. And let's dive in. What is LedgerLink?
Yeah, I think so. I'll give the history of this, but of how I came to this idea. But LedgerLink essentially is a pioneering technology platform, essentially designed to harmonize your traditional financial infrastructure with blockchain-based digital assets. So think of it as a Web 2.5 or middleware of sorts that makes adoption of digital assets seamless for banking and non-banking institutions, essentially providing an orchestration framework between asset tokenization, which is tokenized assets, and digital asset custody, traditional core banking systems, treasury systems. And what we're trying to solve, which is a bigger sort of narrative, Sri, is that if you look at the emergence of digital assets, both in context of crypto and RWA, the real world assets, which is nothing but a shift in modality. The biggest challenge for banking, non-banking financial institutions, including smaller entities who have to account for assets, they have to somehow receive an asset, value an asset, integrate the asset in some system, and then keep it safe because of the fact that it's tokenized assets of sorts. And I think what we're trying to do is one, I identified this problem both as an IBMer when I was working with world's largest financial institutions, and then eventually when I became global head of digital assets, which is when we met. The biggest challenge for me was that the lion's share of focus was on key management. But after we solved the key management problem, how do we institutionalize this at scale? It's no longer conceivable to be able to account for these things. And these accounting systems are not just keeping track of ownership records, they feed into treasury management, cash management systems, and the risk model frameworks, which essentially govern the banks and financial institutions or any institutions that's dealing with assets in general. So LedgerLink was born, again, as the name suggests, It's linking ledgers, the old and the new. So the old world is the core banking system, messaging systems, the newest blockchain and digital assets, and we sit in between to bridge the gap to seamlessly move the assets back and forth. A way to bridge it.
All right. So that's very interesting. So if I were to understand it more clearly, we've got, as you know, traditional financial markets participants, they enter digital assets, and their participation in crypto and blockchain based asset management is going to increase exponentially. They will need some kind of a bridge for not just managing custodying assets, which is probably something which is already in an in a reasonably
That's
evolved
table stakes.
stage.
Yeah.
Yeah, but really sort of, if you look at all banking operations, like you said, treasury management and what have you,
Yeah.
and you got now the on-chain world of digital assets. How do you bridge that? And that's where kind of your middleware comes together, so that banking systems will work more seamlessly once once they are you know large participants in the entire digital assets ecosystem. Is that how one should look at?
Yeah, I'll steal that. I think that's a well understood concept, and I think essentially we're bridging the gap between blockchain technology and core banking systems. But I think your narrative is spot on from
Right.
that
No,
perspective.
even at a very sort of abstracted level, like as even at Arna as a DeFi asset management protocol, we got all these smart contracts and these structure. Essentially, we create structured products. Now there are users
Yeah.
who interact with them, deploy stable coins. These smart contracts, they manage all the transactions autonomously by taking a feed from a deep learning model. Now, as we launched a couple of months back, and then we've kind of tested out everything strongly, got more than 100 users, a few $100,000, and we tested out, and we kind of deploying all the contracts again after multiple upgrades now. But even in this phase, I realized, as we were talking to the accounting side of the company and the auditors,
Yeah.
that this amount of transaction and data that's going on the product front, to
Yeah.
translate it in a meaningful way for the auditors, for them to handle the accounting side of it, is itself a huge challenge. And we clearly need these middleware pipelines in multiple dimensions, I guess.
No, no, absolutely. And I think one thing you hit on, Sri, which is such a critical point, and I'm glad you mentioned that, that what you're doing is you're building this super interesting, hyperactive financial product on blockchain, which is, in terms of it's adhering to principles of decentralized finance. You're going after velocity increases, you're going after ability to be selective and bypass a lot of intermediaries that provide the same function today. But even you as a business have to account for where things are, which means that there is on-chain activity happening, and your auditors and your financial institutions like, okay, this is how much assets we have, and you have to have some bare bone accounting system. Now you take a bank who actually have fiduciary responsibilities and prudential regulation. They have to keep your assets safe. They have to make sure that they are keeping the right accounting systems, right ownership records, ensuring that all this is reported. The banking, the financial reporting infrastructure, the accounting system infrastructure, and ensuring that the right records reflect on your accounts in the right amount of stipulated time. You can see as to how exponentially the problem becomes bigger and bigger from simple business accounting that you're doing from that perspective. And I think the way it's done today is because it's still in its infancy. It's a manual process. People are taking the CSV files from their custodian or exchanges and somehow integrating them into a sub accounting system that eventually becomes a sub account as opposed to a account. But you can't scale that system, which is largely manual, because our when you get into the numbers that I've been used to both at State Street and my work with the financial services industry, it's in trillions. Like at State Street, we would custody about 30 plus $1 trillion worth of assets, and we would actually have asset. The SSGA, which is the global advisory, which is the asset manager, was $9 trillion, a little smaller than BlackRock, which is the
Well,
biggest.
mhm.
So when you go to the level scale, suddenly your risk metrics becomes huge, because even a few percentage points can amount to billions. And that's where things get super interesting from that perspective. And I gathered this, that my bigger challenge was not inception of technology like custody systems or to asset tokenization system, because these are table stakes. Everybody has to get this. But I have to make sure that I have the right operational framework, Sri, because as we discussed when we met, that banks don't generally are not handling money anymore. These are massive data processing companies who have a robust operation framework, which is what they do. They de-risk the system from nefarious activities and so on. So for them, they have a guidelines around it. And if we have to adhere to the same sort of operating principle, then it has to be the same for digital assets because their role in this market structure hasn't changed. And we are trying to sort of give them those tools so they don't have to change their operating structure. So somebody's dealing with ETF and you tokenize ETF, you shouldn't have to have a separate desk to deal with tokenized ETF because it's the same asset type, except that it's now changed, shifted in modality, if that makes sense.
All right. So no wonder you came up with this interesting Web 2.5 analogy that sits between the Web 1 world and and Web 3. And so it was interesting to see the 2.5. I mean, there was Jack Dorsey who dialed it further ahead, with Web 5, and then Nitin comes up with 2.5.
Yeah, I'm glad you compared to Jack Dorsey. Of course, he's on a different league altogether, but that was like interesting. And if we were all in crypto Twitter, like what? Where the hell you get five from? We're still stuck in three. We haven't achieved the vision of three as a consumer led economy and as ownership of your own data and everything else. Suddenly we go to five, and I'm like, okay. I'll dial back to 2.5 because that's more amenable, that's more consumable by the industry. So
Yeah. Do you think BitFi is going to become big?
when you say BitFi,
Bitcoin,
what
fine. I mean, a lot of
finance?
yeah,
Yeah, yeah,
the DeFi on Bitcoin, is that
yeah.
something which
So
could take a different trajectory? Of course, there are a few things happening out there right now, but
yeah, yeah, and BitFi is interesting because that the term I'm not very familiar because not entered the mainstream yet. So I think I would give you credit as well if you coined the term. But I would
no,
say
no,
two
not me.
things in this. I've seen two things in this. Right, one is this year or 2024 June timeframe. You had close to about $8-9 billion gone into a very robust ecosystem for Bitcoin, and that's essentially because Bitcoin, as you know, it's 2.2 or 2.3 trillion in market cap, which is the largest amongst all the altcoins today represent about 600 billion or whatever. And the main thing was that all the financial primitives, the borrowing, the lending, the collateralization, the DeFi activities, the protocols, the Uniswaps, the Aarnas of the world, they're sitting on the altcoin arena. And the question then becomes is how do we make sure that technically we have entry points from Bitcoin or BitFi ecosystems? How can I bring the same products into this world or move liquidity on the other side because it's lucrative? And for Bitcoin owners, and there are many of them who have the advantage of time of owning a bunch of Bitcoins, suddenly they're sitting on this pile of assets, which is non-productive. And they're salivating over the 4%, the 5%, the 7% risk-free returns, as you would see, or returns with minimal risk. And they're saying, you know what, if I have 10 million and I can get 7%, that's not a bad return. Right now, it's just sitting on a vault. So this notion of BitFi came about where a lot of projects try to mimic the Ethereum, the Solana ecosystems onto Bitcoin ecosystem, or they're building a bridging technique that allows them to move liquidity. I think that it will have to, just the principles of economics, it will have to take shape. Whether you do it in a combined form, like what you're building with Arna, which is giving you the financial wherewithals and platforms to be able to move liquidity into your platforms and deal with those financial primitives that are listed, or it'll have its own native ecosystem, and maybe it's both. Only because it's proven in the alt ecosystem,
Yeah.
not necessarily Bitcoin ecosystem, and we'll see where it goes.
Yeah, as long as everything is on in a decentralized structure managed by smart contracts, or protocols, because we've seen exactly the same kind of BitFi in a centralized system, which has led to all of the issues of excessive
Risks, yeah.
leverage and the risk that we saw earlier,
But
and the blow up of multiple crypto custodied centralized institutions 2 years back.
yeah, I'll also say this, right. In all, I've been regular to Bitcoin conferences because I have two interests: institutional interest and technical interest. But there's a whole narrative on ossification of Bitcoin itself. And ossification are those hardcore Bitcoiners who says it's working fine, don't change anything, we are good with where it
Mm,
is. I'm not in that camp. And there's a fight, and the main thing is the people who are proposing ossification as a foundational strategy are the ones who have the most to lose. They're the
mm,
ones who hold the most amount of Bitcoin. And so it'll be interesting to see as to who really, but to me, technology really is impartial. It sees no bounds. And if you have a better option, then people will move towards that option and innovation will take over. So I have the conviction that BitFi will evolve only
yeah.
because it's pointless to just keep all that money into a vault.
Absolutely. I think I don't know what's Bitcoin's dominance more recently, but probably greater than 55 percent. And with that kind of asset base, if there is a way of generating passive yield on that, as long as the yield comes in the right form, and it's not one of those Ponzi on top of Ponzi, then there's so much that can be unlocked in terms of value. So there's a great, the whole DeFi ecosystem could get tremendous amount of liquidity if sort of Bitcoin becomes an underlying asset in that going
Yeah.
ahead. So I think so some exciting times ahead on that. But Nitin, you had a ringside view at one of the largest financial institutions, one of the largest asset management firms at State Street. Of course, you'll have certain things that you may not be able to speak about in terms of confidentialities. But how do you see large financial institutions like State Street or other asset management firms? Of course, we've got Larry Fink at BlackRock, who probably latches on to every,
Yeah.
whenever something's already kind of has got the booster behind it. But overall, how do you see large financial institutions participating in the digital asset economy? I mean, we've seen one. I mean, there are multiple dimensions to it. Clearly, one is from an infrastructure side. All institutions using blockchain primarily for their settlement infrastructure, which can become so much more efficient. But if you look at it from product side, we've got ETFs now, Bitcoin ETFs, hybrid ETFs also getting sort of approved. So we've got crypto native assets which are getting wrapped with products like ETFs and getting providing access to millions of TradFi users. But it's the reverse which is actually going to, when financial assets are going to get tokenized on chain and be available seamlessly, which is really the huge big opportunity, right? So how do you see large financial institutions like State Street or other asset management firms, banks, really playing in this financial value chain?
Yeah, that's a great, and there's a lot to unpack there, as you mentioned. So let me just simplify a few things for the audiences, right? So there are two categories of this, of where we can take this discussion. One category is the asset class itself. And I say asset classes, broadly speaking, there are four asset classes that the entire financial services industry uses them for risk modeling and figuring out as to who handles what. And generally, you have cash or cash equivalents, you have securities, you have bonds, and then you have something called alts. Alts is alternatives. So all the hedge funds, all the private equity, everything is
Yeah.
packed into alts. And early days, they did the same thing with crypto. So now crypto is seen as a fifth asset class, and I've written extensively about this, where crypto has its own economic system, it has its own element. So when you look at asset categorization, is broadly speaking now in this modern crypto era, and I say modern because it's been 16 years, we are looking at something called RWA, which is real world assets, which is essentially tokenization of these four asset classes: the securities, the bonds, the real estate, and everything else that the banking industry and the financial industries knows how to value, knows how to engage in financial primitives, knows how to build products around them, knows how to borrow and lend against them as collateral, and so on and so forth. And then you have crypto, which they really haven't figured out the risk models. They just really don't have the technical wherewithal to use it as a collateral or borrow and lend. And this is banking, not the Aave and the Uniswap and Aarnas of the world, who are progressing this in native digital form. So from banking perspective, you see this, today the total crypto market cap is 3.68 or 3.7 trillion. So you now begin to salivate that, hey, if suddenly I'm getting triple digit or 1,000% returns, and there has been 5-digit returns in many of the meme coins, suddenly now the financial industry, the investment management community is interested in it. The clients, the asset owners are interested in it because they want to take a piece of that alpha that they can get here that they cannot get from traditional financial, which is 2 or 3%, depending on the global macro situations and so on and so forth. So suddenly you start seeing wrappers. So ETF is nothing but a wrapper. You wrap an wrapper. And the reason why you have the wrapper is because there are market structure, and there's a second part of the conversation is the difference between market structure and market infrastructure. There's a market structure that deals with filing the S1s, having disclosures, having daily reportings, having end of day reportings, which allows for asset owners and asset managers on their behalf to deal with things like liquidation, deal with things like, and they have a risk model framework and they know a throat to choke and so on and so forth. So all the wrappers that you see now are essentially trying to fit what is sort of, a degen world into the more structured, financial world so that they can have exposure to it. And then the reverse conversation that you're talking about is basically, can I tokenize securities? Can I tokenize real estate? And that's beginning to happen. I mean, as we talk today, $212 billion of fiat, which is stable coins, that's tokenized fiat. You have close to $64 billion of assets, real estate, private credit, bonds. I mean, today, this morning, Apollo, which is one of the large asset managers, announced a private credit in tokenized form. And that is essentially tokenization in native form of traditional assets. In all of this conversation, we still haven't discussed what happens to native crypto assets, direct
Hmm.
consumption by the industry. And that is only because there is not sufficiently developed capital market infrastructure. So the difference between capital market structure is the various participants with different functions they perform, the broker dealers, the custodians, the centralized security depositories, the clearing corporations, and so on. They all form this apparatus which allows for the mobility of assets to ensure de-risking and ensure that there are certain things happen in time frame and these entity becomes accountable, and they charge a fee for it, which is conveniently passed on to the end consumer, whether you're a buyer or a seller. The market infrastructure is transmission mechanisms, which is today a stitched up system of core banking systems or ledger systems, and messaging systems that transport these, and they have protocols that essentially send messages between financial institutions or use systems like Swift. And suddenly blockchain comes in, and blockchain basically modernizes that financial infrastructure, allowing for the efficient transmission, transactional efficiency, transparency. And I think that's where the lion's share of focus has been. We haven't really focused on the impact of this modernization effort on market structure. So I'll pause here. I know I said a lot, but to see if that made sense.
Yeah, in fact, that market structure, that apparatus needs disintermediation, and that's exactly what DeFi asset management does. I mean, I'll give you a simple example of how our Aarna, our tokenization platform, does that, and this is exactly where I think crypto native assets that need this structure for being managed, being accessed in a risk managed framework, and being custodied completely on chain sort of comes in. So our RFI tokenization platform is used to create crypto structured products. The underlying assets are all crypto tokens. Okay. So right now, for example, the universe is the top 50, 40, 50 tokens, which, and it's all on Ethereum right now. And these 40, 50 tokens are filtered on the basis of market cap and liquidity. Now our contracts are composable with both Uniswap V3 and 1inch, and all the swaps, the transactions that happen when users deposit stable coins, and the contracts, the vault takes the input of the predictive AI from the Alpha 37 model. Those all happen directly on Uniswap's pools. Now, This happens over and over again, and this is completely on chain. There is completely disintermediated. There is no, there is no need for any apparatus in between to manage this, and users custody their assets in their wallets. Now, this can be a huge impact on existing financial structures. Imagine the likes of a Citadel, who probably process, I understand, more than a quarter of equity transactions. You wouldn't need any of that, right? In a DeFi architecture, if everything gets tokenized, and the entire settlement, the market making, everything happens on chain, through liquidity pools, that entire infrastructure is apparatus will not be needed. So this can have a completely profound foundational level impact on financial markets as they exist today.
Yeah, no, no, I couldn't agree more, and I would say that the first wave, which is where my job at State Street and my cohorts in Bank of New York Mellon, Northern Trust, JP Morgan, at the time, right? These are big names with a lot of assets under management, and they provide the foundational services for all banking function across the industry, not just capital markets, retail, trade finance, and the whole gamut of other sort of use cases that need banking services. And the task was to come up to speed and have the table stakes, which is foundational tech, to participate in this in one form or fashion. And this was just 4 years, 3, 4 years back. Until 3 or 4 years back. This year, I've been meeting in my pursuit to sort of find the right product market fit as I'm talking to these large financial institutions, the large asset managers. And now the ask from platform like me is, can we participate in the DeFi ecosystem? Can we actually extend our basic, table stake infrastructure, which is okay, I'm custodying an asset, I'm connecting to some bunch of blockchains, I'm sending the asset and I'm recording for it. But can I participate at the very simple level for things like staking? And I would say that you know and this is just like internet, right? I gave example of as to how information intermediaries like travel agents. I don't think any of us really go to a travel agent. We use Expedia, Trivago, a bunch of these websites. They do the same function. They book us tickets, but they also give us a holistic travel experience, above and beyond what one travel agent would do in a short amount of time with a lot cheaper tickets and everything else that we get. Similarly, I would think that a lot of value intermediaries will eventually go away, but they have to still adopt the market infrastructure first, which means that there has to be an evolution and maturity of these technologies that connects the various participants, which is quite native and quite globally available in the Ethereum and Solana and Bitcoin ecosystem. Like, you don't need anybody's permission. Like today, if you had to buy an IBM stock, as an American living in the US, it's easy for me to do it. I can just go to Fidelity or Charles Schwab and buy it. But for you, even though you're globally aware and you are, of startup, you understand these things, you had to go through all kinds of hurdles because you're dealing with the US capital markets, and there are enough barriers between you sitting in India and. But if you're dealing with Ethereum, the rules of engagement are exactly the same whether you're in Uganda, you're in India, or you're in United States. The rules, the market participants are exactly the same. So you lower the barrier a lot extensively. And I'm assuming the same thing is true for Arna as well. That suddenly you're open to business to anybody from anywhere as long as they have a crypto asset and they have network connectivity to connect. And that's how I see this industry evolve at some point. You start with everybody being ready, and once you begin to have a ubiquitous infrastructure, then you'll begin to slowly say, I don't need a centralized security depository, or I don't need a clearing bank. I can do a peer-to-peer transaction between two financial institutions. Why do I need my asset to go through five different intermediaries? But for that to happen for traditional assets, Sri, there has to be a shift in rulings, the rules that govern our capital markets, and that'll happen. Eventually, the technology and market will speak.
Yeah. Yeah, I think yes, definitely the regulatory framework is one of them. The market is the other. I think one other dimension of it is also the technology primitive in how consensus and settlements are done on blockchain as well. I think there's that also needs to evolve. And even though it's supposed to be completely transparent, there are issues, for example, like manipulation of MEV, and
Yeah.
even at Arna, we've seen, like, as we kind of matured our how we handle transactions, we had to ultimately kind of structure all our transactions through private mempools or dark pools, yeah, because you can be front run and all of that stuff can happen. Now, it's also amazing that, there are a lot of crypto bros who talk positively about MEV as a market mechanism, which it is, but it introduces a lot of inefficiencies, or systemic risk, if uh, what we're talking about in the context of large scale settlements and markets being handled, assets being handled in a much more transparent way. What are your thoughts on how MEV and consensus needs to evolve?
Yeah, so a few things, right? And I actually opined on this, and when Ethereum went through its shift from proof of work to proof of stake, so they changed the consensus mechanism, which was not just a technical shift; it was an economic shift of the entire platform. So back in the day, they were using proof of work, which is what Bitcoin uses to achieve what they call as transaction finality, which is how you achieve, and they essentially if you look at the mechanics of how things really work, your sending transaction gets pooled, so you basically submit, you queue, you order, you execute. That's essentially how the three-step process works. And
Yeah.
so when you
So,
submit
Nitin,
transaction goes to,
maybe I kind of dove straight into MEV. I mean,
yeah,
maybe for the
yeah.
benefit of some users, maybe you could just explain also and decode what MEV is really, what's how it impacts transactions on a blockchain. Okay.
Yeah, and so essentially, what used to happen was you submit the transaction, gets ordered, and ordering was sanctimonious because orders prevent double spend. But when you change the technical element of consensus and economic system, you shifted from miners. So MF stands for the audience, minor extractable value. It's a shift after Ethereum
Maximal
shifted from,
extractable value. Yeah.
yeah, it's minor or maximal depending on how you position this. Is so early days you had miners, and miners didn't have any work. After the mining was shifted, it became minor extractable value, and then eventually when you build a marketplace, they changed the miners to maximum extractable value, because that shift was saying that, okay, now we have a marketplace, and we are accepting the MEV as a marketplace, to say, hey, if you have all these miners who have given up the revenue they would get from mining, which was much more significant, because Ethereum shifted its economic model to be a mere deflationary model, that a lot of fee would be burned to inflate the value of the asset by deflating essentially the economic system underneath it. What began to happen was that the people who are running the nodes suddenly had to shift to a different economic model, and the the MEV essentially led to a point where you could actually switch the ordering of transactions, and that would
The
be
validators
at
could
the
do that
validators
depending
could,
upon
yeah. So
their
essentially,
interest.
validators who proposed the ordering function, they could basically, based on their interest, and you had all these bots who would say, okay, I'm going to pay you more if you let my transaction go before this and after this. So you had things like sandwich attacks, which I would basically know what is the order coming in, and I would say, okay, to my advantage, I would place my order first, sell it at a higher price till the value goes down, and then eventually buy it back. And then you had all these activities happening. So that's essentially what MEV is. You're basically exploiting a retail user, or who user who's not aware of these complexities in the system, who simply wants to submit a transaction, make sure the transaction gets through. So MEV is wrong, is not exactly legal in the traditional financial sense, because you are essentially manipulating the markets by getting privileged information, whether you're running an exchange or you're running this mining pools, and you are able to manipulate the transaction. But more importantly, Sri, there's a fundamental tenet in blockchains, which is censorship resistance, which
Absolutely.
means
Yeah.
that they should, the immutability is what lends the blockchain its trust, which we do get after transaction finality, but it is not to be censored. And so the ordering of system, it still is quite sanctimonious in Bitcoin world, but in Ethereum, that tenet was broken. And you begin to now, what you have done, Arna, which is building mempools. I actually worked on a project called Ethos Labs, which was spend so much time in figuring out how do we solve for two things. One thing is transaction cost, which eats into your profits for a fund manager, for a common person, because you're paying fee of some sort. And if the fee is predictable or it's fixed, you know what to expect. But if it's not, which is a variable fee structure that Ethereum has based on its price, it eats into what you were. And second thing is slippage. Slippage implying the fact that you're expecting a certain price for your asset when you buy or sell, and if you're not getting the price, then that's eating also into your profitability equation, as or your returns that you're expecting from it. Now, financial industry is quite savvy about it, even though there is some slippage depending on timing of transaction in traditional finance, and that is just the nature of how markets work. But in blockchain world, all this is transparent. We kind of know what pricing we got, we know what happened, and when the Ethereum ecosystem began to accept it, I think that many of us were against it, and we were like, this shouldn't be happening. And of course, now you have MEV resistant protocols that became to evolve, and that to me is reflective of why protocols of Solana and many of the DeFi projects like Jupiter have evolved on Solana, because it's the Ethereum ecosystem become too complex. So markets have punished the Ethereum, and that's reflective of its value and the hoopla that you've seen with the Ethereum Foundation to say we got to make this more user friendly, we got to make this more simpler. So it's been an interesting use case, I would say, for graduate school studies to say, whenever this becomes ubiquitous as to evolution of these protocols and what worked, what didn't work. So I'll pause here, Sri, to see if that made sense.
Yeah, no, absolutely. I think all the sort of we're at an interesting time when the Ethereum Foundation is sort of in flux, and I really hope that they get focused on the application side of things. Ultimately, it's the products that are going to be built in DeFi, and they have to evolve the narrative beyond core. Uh, you know Exciting, interesting blockchain technology related, consensus related narrative to a more application focused narrative as far as sort of Ethereum is concerned. Because if
Yeah.
DeFi protocols are to flourish in the right way, if they're going to achieve scale beyond what has been done. I mean automated market makers, lending, and stable coins. These are the three things that have kind of found real product market fit. But beyond that, everything else that has to come in and flourish will need thinking at a deeper level. That's one part of it. The other part is of really handling aspects like MEV and slippage, because this really erodes everything that can be built in a permissionless, trustless design on blockchain at one end, and then we've got slippage and MEV kind of impacting the entire
Yeah.
transaction mechanism. So I think we'll see how things get managed, but it'll be very interesting to see what the new narrative from the Ethereum Foundation would be like. I haven't kept a pace with that. Do you have anything to kind of reflect on?
No, no, I think they've been the community today actually nominated. I forget the guy's name. It's Danny something. Who's they have a new sort of shepherd for the Ethereum Foundation, because Ethereum Foundation is sort of shepherding not just the governance and the code governance and the community interaction to solicit opinions and engage with community to approve and disapprove the proposals, as you know, the EIPs and everything else that go. So it's a very democratic process per se. But I think Vitalik, which is one of the founders of Ethereum, one of the prominent founders of Ethereum, has laid out his manifesto. But my question on that front is, okay, fine, you have these manifestos, and it'll come. But I believe in this journey, Sri, of evaluating in Ethos Labs, where I was working on. I wrote a white paper on this topic. I literally spent about 60 plus hours. That's how complicated the Ethereum ecosystem have become. And I go with Occam's razors thing. Like things have to be simple. Things have to be uh, overly simplistic for masses to understand. So if we aspire to get next billion people onto this platform, we have to be hyper focused on oversimplifying it. And from that perspective, so I think they picked a new sort of head, if I can use that term, for the Ethereum Foundation. to lead and sort of engage with community and bring the confidence back, because the confidence in Ethereum was eroding, and that's was the result of everything. So they have a new leadership. I think it'll be reflective, but again, I will say this, that every year or every, I would say, 12 months or 14 months, Ethereum went through a massive shift in technology, in its economic systems, economic modeling, token sort of economics. And while it's, as a technologist, it's super interesting to see how they're able to update codes in real time while transactions are being processed. That is like just a genius in terms of how the
Mm.
community did that. But the downside is that they're introducing so many changes so fast that is becoming, even people like you and me who are in this spending full time, you need a PhD in Ethereum just to understand the entire moving parts of how things affect. And I don't think we have the time for that because we have other things to worry about, like our business, right? So that is a challenge I think we need to solve. Simplicity.
Yeah. But what's your take? The future of finance, is that going to be built on Ethereum, in on the
No,
Ethereum ecosystem as such?
no, I don't think there'll be a one chain future,
Hmm.
and I say this with significant conviction, because if I look at sum total of all the innovation, whether it's privacy preservation, whether it's going after ability for me to create a built-in KYC systems or built-in identity system, which we haven't even touched upon, because right now the prime focus of identity has been just wallets and an external system that maps wallet to somebody's. But we haven't really, there are a lot of product protocols and projects who are emerging, who are providing a much better narrative, much better technical stack, much better use of technology to engage developers in building that ecosystem. So I would say that I believe in multi-chain future. I also believe that the likes of Solana, the Sui of the world, and which is offshoot of one of the splinters, if I can use that term, out of the DM or Libra project from Facebook or Meta. And of course, you have the Bitcoin. Bitcoin right now is still a little behind on that innovation curve, but with, as I mentioned, 6 billion plus invested last year, I see a lot of DeFi projects on Ethereum, which is trying to attract capital, not only the 2.06 trillion that it has, but attract the remaining 600 billion that you have out there to come back in the system. Uh, I don't think Ethereum will be the only winner. In fact, I would say that Ethereum has to work much harder to preserve its existence.
Hmm. All right, that's a pretty sharp observation. So it's all valid questions on both sides of the table. So one needs to see how this is evolving. Taking a segue from here, Nitin, you had an extensive career at IBM and went on to run parts of their blockchain initiative. Tell us a little bit more about that. And I understand you piled up a rack of patents out there as well. So tell me, what's your favorite patent out of that?
Yeah, I mean, journey was amazing. Actually, I was fortunate to found two things. I founded Blockchain Labs, which essentially in 2013, 2014 took me 2 years. I had some amazing mentors, and they let me do
How
it.
long were you there at IBM?
23 years, the lion's share of my
Wow.
career actually at IBM. And I used to work in banking system, middleware systems. I learned a lot, and I kept shifting every 2, 3 years in new areas. And I grew from client engagements and what we had built for clients. And I saw through the cloud, the mobile, and I was CTO of mobile payments when I came across Bitcoin, and that was my bug to
Hmm.
say, hey, this is. I spent 3 months locked in my office in Austin studying it. And then I went back to IBM and said, we should invest in this. And at the time, Bitcoin was associated with Silk Road, and like, oh, this is all fraud, and we can't talk about banks. And lo and behold, 6 months later, some of the largest clients actually asked our CEO at the time, Ginny Rometty, like, what's your opinion? She had none. So of course they came back and said, this guy was talking about it 2 years back. They called me back and they said, let's go and build this. So I founded Blockchain Labs. Worked with about 1,200 global banking institutions. I had a 350 miles a year travel, uh, established labs in 12 countries, unlimited budget. It was amazing. Like I could learn so much in terms of setting these things up. And over time, of course, there's an expectation that you're investing all this money, you need to get this return. And of course, IBM began to invest into cloud and other areas, then only because blockchain was not making $1 billion, because it's still early days
And
of
was this
of
about
its.
the Hyperledger Fabric, or was it something
That's
else?
right. I was involved with a bunch of our researchers to build Hyperledger Fabric, and I actually, after a year, I realized that permission blockchain is not the way to go. So I lost a lot of political capital in fighting that battle to say we should not bet on a horse this early, but we should keep our options open with Ethereum, Bitcoin, and some of these other areas. And then they shut down blockchain. And then I founded Digital Asset Labs to focus from technology, because IBM was a tech company, to focus on digital assets, to say we need to focus on stable coins, to focus on tokenized assets as a business, and work with financial institutions and private equity firms. So I built the first private equity marketplace for Northern Trust, which is the third largest custody bank in the US. It was a great journey. Build a thing called Worldwire, which is a stablecoin network in 2019, before stablecoins were cool from that point of view. And again, it's after 2 years before COVID, IBM chose to just shut the whole thing down, because again, they were expecting a lot. The expectation was not met in terms of revenue expectations. And so then I moved to IBM Research, doing the future of finance. And that was great, because I got to work with some of the smartest people in the industry. And at that time, I had to envision what the future of finance would be with blockchain, AI, and quantum. So we've been envisioning the things that you see now with Gen AI and everything else, like 2019, 2020 timeframe. And then they shut. They basically wanted to focus purely on cloud, and I was working on a key project on with U.S. Treasury on tokenizing Treasury, which, as you see now with money market funds and everything else. And I had to work at bank, and at the time I was working with State Street, and they said, "Why don't you come and join us and run this for us?" And that was my transition. On patents, yes, I did find 170 of them in IBM. So it was an amazing thing. With LedgerLink, I just filed five
Sorry,
for
did
now
you
because it's
say
expensive.
170?
170 patents. Yeah, it was a
Wow.
great
Okay.
journey, and we use that as a creative outlet. A bunch of us would sit on Friday, spend 2 hours figuring things out, write the whole thing up, write the design. Some cases would codify it with code and file it, and that was a great creative outlet that I found. And I would do that every twice a month. And it adds up over time. With that many years, your patent portfolio keep increasing. So it was a good journey, and I'm proud of the work that we did there.
Oh, awesome, awesome. Well, I can add that I've got one patent in a very different space in functional foods in
That's
protein.
fantastic. That's fantastic. Hey, every patent matters, and it's not the numbers; it's the value. Maybe you have a high value patent, and 170 of them actually means nothing.
But Nitin, what's your favorite patent? Would love to hear about.
Yeah, I have two. One of the patent was great, where I we worked on figuring out a mechanism where we can embed your identity in with your transaction. So right now, your identity is separate from your assets.
Yeah,
That's true even banking, right? And I
but
wrote
not
this
not in the
pattern where
blockchain world where your identity and your sort of
no, not in
through
blockchain. Because
your
blockchain, your wallets are still tied to you. Your identity is still like who. How do you know it's you? And the projects like
Mhm.
WorldCoin or human projects are actually working on essentially embedding identity in every transaction you do, which means that you still will have challenges of cybersecurity, which means that if someone tricks you in phishing type attacks, and you're forced to sign transactions or you're forced to do biometrics, that's again that's a fault of the user. But systemically, nobody should be able to attack your wallet or steal your wallet because of vulnerability in the system. What we've seen with smart contracts, re-entry attacks, and many of the other vulnerabilities that we see. So I built this. We worked on a pattern where basically your identity and your assets were sort of entangled, which means that until your identity was your wallet. They were not two different things, and that would be recognized in any blockchain you would go based on your biometrics, and there would be a system that you would define. I think it gave us a lot of creative thinking in terms of how do you solve the interoperability problem? How do you solve using multi-factor authentication? How do you codify that into the system? And I think almost 4 years later or 5 years later, we saw this WorldCoin with the orb coming in, trying to solve the UBI issue. But we had envisioned some of these things back in the day. So that was great because it got your creative juices flowing. Second thing, which was even more interesting, was space. And so we begin to work on a system which allows for the space economy to flourish, where you would have all these LEOs, the low Earth orbital satellites. There are 1,600 of them and a lot of space junk. And they eventually have to communicate with them and use their bandwidth and their services. But there's an ownership to these satellites, there's an issue in the satellites. And if you could develop a space economy where unused capacity, like Uberization of satellites, can they extend that capacity to other satellites to use them when they're not used? And how do the owners of the satellite could benefit from the payments that, so all this AI to AI payments that we see now is what we had envisioned, where you could do this. And I think we worked with JP Morgan actually was able to execute one transaction using a small a small device into space. And the question was that this financial system here, nobody in space case yet about financial system, can we then use that system to have satellites be accountable and have enough money in their respective wallets or accounts that they can pay for services they avail from those services? And depending on which wallet who owns down in the earth, we could sort of withdraw that and use banking system to do it. It's super interesting from that perspective, I think.
Yeah, it sounds out of the world. The second one, a space economy, an interplanetary economy and transfer of value. I think we know someone who might be interested in that. There's this guy called Elon Musk who might just find it very
I heard
exciting.
about him. I heard about him. I'm hoping you have the marketing. Your marketing engines are strong enough to reach him. If he listens to this, I'll be more than happy to work with him to make that a reality for sure.
Yeah. No,
Incidentally,
so
he lives two. Elon Musk lives two exits away from Austin, where I live. He's in Georgetown. I'm in Round Rock, so
all
he's not very
right,
far
yeah.
away. Except that I'm hoping the medium of communication is through this podcast. Uh,
Through unashed, yeah. Yeah. No, it's been a while since I've been back in Austin. Love Austin. The music scene, the blues rock, jazz, fantastic. Yeah, maybe this year, what are the conferences that are happening in Austin nowadays? There's
Actually,
consensus and
this
there's.
year they moved consensus to Toronto because the Austin Convention Center is going through renovation. The only sizable, the big one that's happening is South by Southwest, which is a very Austin native conference. So Austin has South by Southwest, which is music. Started as music, it's music, movie, arts, and education, and it's become big now. And then you have ACL, which is Austin City Limits, which is purely a music festival. And then, of course, you have F1 Circuit. For now, these are the big ones.
So is there a tech startup side to South by Southwest as well?
Yes, that was actually, there's a whole NFTs sort of angle that was introduced a few years back. So South by Southwest was early on just a week long music and movie festival. Now you have music, movie, art, education, and a tech side of the house, which is all the startup tech for the changes humanity and everything else. So it's a 3 week long festival, which if you live in Austin becomes a nightmare because of traffic and airports and everything else. But nonetheless, it's grown, and I'm hoping it stays there because 4 week festival just gets too much. I think 3 weeks is too much.
Jeez, so
So
much, yeah. All right. No, so I mean, you had a fantastic journey, and and whatever you're building at LedgerLink is sounding very exciting as well. And at on the Unash podcast, one of the things we do is celebrate a moment in an entrepreneur, in a founder's journey, and because we handle so many things that we forget to celebrate the small wins, the big wins, so many of those. So here's an occasion to celebrate one of those moments. What would you like to do? And we're going to do that with a drink.
we're gonna do the. I was told, and I came prepared. My favorite drink is Scotch, and I got this, which is quite it's smoky in one of my trips when I traveled trip to Scotland. So cheers,
An
and this time I'm
Ilemau.
celebrating. I'm celebrating your success because you, as a founder, dedicated 10 years for Milk Mantra, and you had a successful exit. So kudos and congratulations. And
Thank you.
you had the wisdom and judgment to overlap that with Arna. So you have another toy and another adventure to engage in even before you got off the first one. So kudos to you to have that foresight. And you're absolutely right. I think I sometimes feel that my corporate journey was a lot easier because you went to work, you got paid, and you had your corporate politics. Now you're doing everything. Your marketing, your HR, your technical direction. You're doing everything from that perspective. You learn a lot, but I would just say that, and you know this better than I do because you've been a long time entrepreneur. I just got in this last year. Is you learn so much more about yourself, and it's a very humbling experience in terms of things that you don't know and things you get dropped off from this conference list because you're no longer a part of the big company. It's humbling, and to that, uh, to Milk Mantra, to humbling experience, to you, cheers.
Yeah, cheers. Thanks for that Arna plug, Nitin. But yeah, it's I like doing things in a very immersive, deep way. So I've taken my time really understanding this space when I when I got sort of landed with on DeFi, and I've taken s- some time to really understand sort of what is the implication of this space and how asset management will completely the entire asset management stack will completely get onto a decentralized framework sooner or later. So that's what we've been working on, and sort of especially at the convergence of tokenization and AI. But yeah, but thanks for that plug. But here's to you and LedgerLink and all the work you're doing, and of course we're going to be doing several things together going ahead as well. So I'm having some soju. I found some remnants of it, at the lab. So cheers.
It's great. Cheers.
Hmm. All right, Nathan, fantastic having you on Alpha Unhashed. I think this was sort of an exploration into multiple facets of crypto as a technology, and how crypto and existing financial markets are going to kind of merge and bridge in multiple ways. I think this conversation was fantastic. I think we need to do a version two of this in a few months to because the space is evolving so fast. But we can't close this conversation today, without touching upon Trump and crypto.
I was waiting when you're going to ask me that.
Yeah, it's been a few weeks now, and I should say the Trump coin wasn't the best of things that could have happened. But knowing Trump and sort of our understanding, sort of the mercurial character that he is, and fantastic, what shall I say, sort of opportunist in terms of how things can be leveraged. He has a deep understanding of that. So there was the Trump coin. But do you think beyond the talk and his pre-election sort of support for not just Bitcoin but the crypto as a whole, do you think there is going to be foundational level fundamental change in policy frameworks and we're seeing early signs of it, but I'm kind of, I would like you to kind of look 5 years down the road, beyond the 4 year term, and see how the entire DeFi crypto landscape, the digital assets ecosystem could change tremendously with Trump as the president, and what he could drive.
Yeah, so two things, right? One is the what has happened, I would say, in the last 10 days since he reclaimed the presidency, is a lot of executive orders, a lot of action that actually has happened, and appointment of David Sachs, who actually is from the industry, one of the venture capitalists, understands the crypto and AI space, is AI cryptos are, and a lot of executive order sort of, it's a commitment to dedicate the resources to have a meaningful regulation, which is both in terms of SEC in finance, and they haven't actually gotten banking in it, which is deliberate. To have David Sack himself and have SEC, CFTC to have meaningful regulation, in spite of having the FIT 21, which was, in my opinion, one of the most comprehensive digital asset regulation, which didn't go anywhere. So the pendulum from the previous administration has swung the other way around. Second thing, which I think is a much more meaningful way, is executive order that basically requires banking not to discriminate against providing banking services, which is the Operation Choke Point 2.0, which was famed as a ability for banking to kill the industry. And you're a startup founder, I'm a startup founder. We had to do payrolls, and suddenly you have no banking services. It makes it impossible for us to continue with these services, and many of them were affected and they left the US to go to other areas. So that's a positive sign that now you have banking. They've opened up the aperture to say, which is what Hester Pierce, who we belovedly the industry calls a crypto mom, but she had a very proactive and very pragmatic approach to sort of a safe harbor, which basically gives you 2 years without throwing regulatory books at you and building a sandbox. Lets you experiment with these before you go out there in with your crypto project. So all these things to me is very positive, and you suddenly begin to see a lot of crypto firms who didn't want to touch US because it would take 9 months and you had to go through this crazy process with the courts and the legal framework are now returning back to the US. And I every day I get 5 or 6 LinkedIn requests to say, hey, can you join us as an initiative? Can you help us this? Can you help us with that? So that's a positive sign. And I would imagine that in 180 days, which is the duration that's explicitly stated in the executive order, really touches upon to have a much more meaningful framework, the clarity that the industry has been seeking to engage in a meaningful way with investor protection, with the appropriate governance. And Trump coin and Melania coin, maybe not the best approach. These are meme coins, and I've never been a huge fan of meme coins because they don't represent under the moniker or under the guise of cultural shift. I don't think it's exactly doing any of that stuff, but I think it's an indicator. So I'm going to leave that indicator to the mains to be, and everybody who's a truly true degen who wants to play with that, that's their thing. But I see a lot of positive progress and meaningful conversation in those circles because I move in those circles now. I talk to them in terms of where, and I work with large financial institutions both as a senior advisor. I work with many of these entities who are so suddenly you begin to see a lot of job surface of senior architect or chief architect for digital assets, which were not there until 3 weeks ago. With this, these are very large financial institutions who are now going back to investing in these because, and the SAB 121, which was the biggest which was repealed to now SAB 122, which essentially prevented from the bank that I worked at, like State Street and the likes of BNY, to custody the asset. And if you can't custody the asset in a meaningful way, then all the downstream function of collateral management simply dissipates. You just can't really engage in and that stuff. So to me, it's net positive, and hopefully by the end of 4 years, we have a much more robust, well understood framework, and the industry is well along the way. Because I know there's a wall of money waiting from institutional side to get into the space, and we all would benefit from. You would benefit from it. I would benefit from it, and it'll be a good thing for the industry in general. But I'll say one caveat, which don't want to be a Debbie Downer, Sri, on this. We all were excited when Gary Gensler came in because he understood technology. He was at MIT, and that didn't quite bode well. So I'm hoping that it's a much more comprehensive, better experience than we had with Gary. So I'll leave it at that.
Yeah. No, I'm sure it's going with that. But yeah, I mean, it's though all of us in the space had some idea of how choke point was panning out, but it's astounding to hear all the revelations around that, and how crypto founders who have been debanked, how crypto companies have been debanked or not even allowed to get on board. And in fact, it's not just in many ways, this has a ripple effect across. Arna is based out of Singapore, and I can share
Singapore.
with you that it's how difficult it is to get a bank account open for a crypto company, even in Singapore. So this has an impact across, and I hope that this will change now in a very dramatic way.
I hope so too. In fact, I think Chris Dixon who is one of the general partners at A16Z, he had a thing with here on one of his podcasts with Unchained. He did mention that they hired a full time professional to help their portfolio companies finding bank accounts. His only job was to find the bank accounts because even if you had blockchain on your website, they would deny you accounts. And I think that the shift in US, just because other banks have to bank with US because of we still enjoy the privilege of being the world's reserve, it was an extension of enforcement in the US that went to all the banks who dealt with the US. So if a bank would give you a bank account and it were pervasive, then as a part of de-risking measures, you would not be able to use US banking system for clearing US dollar. There's a little bit of that going on too, but hopefully that all eases in a few months to come because of these
Yes, we're
EOs.
looking forward to a more decentralized financial system overall. And I think part of it is also this sort of stranglehold that the US has on the whole banking system. I think that needs to change as well. So that's why crypto and DeFi is here, and we're looking forward to that future. Nitin, thanks. Awesome having you
Thank
on
you.
Alpha Unashed. Great talk, and thank you.
Sounds good. Take care.